Welcome to Trading World Summit. Do you want to learn how common folks were able to generate uncommon profits for many years on end? How about the common traits between these unknown market wizards that you can adopt to improve your trading performance? If you do, you definitely have to hang around for this upcoming interview session. Hi, I'm Philip Teo, your host for Trading World Summit, and I'm excited to introduce to you Jack Schwager, our speaker for this session. Jack is the Chief Research Officer and a founding partner of FundCedar. He is best known for his Market Wizards book series and is frequently cited as a favorite author by the trading community. Jack is credited by many as being instrumental in the launch of their trading careers. He is an established expert on futures and hedge funds, previously having spent 22 years as a director of futures research at some of Wall Street's leading firms, as well as 10 years as a partner in a hedge fund advisory firm. Besides the Market Wizards book series, Jack also authored the comprehensive and highly regarded A Complete Guide to Futures Market, which was released in a revised edition in 2017. Altogether, his books have sold nearly 2 million copies worldwide. And interestingly and very excitedly, in the year 2020, Jack has also published a new book called The Unknown Market Wizards, The Best Trader You Have Never Heard Of. And in today's interview session, I'm going to quiz him on this new book that he has actually published. Now, with this short introduction, it's my honor to welcome our summit speaker for this session, Jack Schwager. Hey, Jack, welcome to Trading World Summit.
Thank you, Phil. Glad to participate.
Wow, it's really an honor to have you on board the summit to share with us your learnings from this new batch of unknown market wizards whom you have unearthed and published a book on recently. Now, for the benefit of those summit participants who might not know you before this, which I think might not be the majority, can you briefly share with us your motivation? Okay, let's go back all the way to the front. Your motivation behind publishing your first market wizard book that ultimately sold millions of copies over the years. Can you share about your motivation behind that?
Sure. So the initial motivation was I thought it was a good idea to just go around the country. And my first book was all U.S. traders and interview exceptional traders to learn from them really what they're doing that the rest of us aren't, and to try to what we could do better. Not necessarily become as good as they are, but at least learn from their wisdom.
I see. And that first book was published, I believe, more than 30 years ago, right now, as of today's recording.
Right.
Wow.
Right. It was published in 89, so 32 years ago. Wow,
fantastic. So at that point in time, how did you actually go about selecting the traders to profile in your first book? Because, I mean, we understand that there's a lot of times, a lot of trading gurus says, oh, I'm so good, I'm that good, I'm that good. But when you actually selected your traders to profile in this book, there must be a certain process that you went about go about doing it, right? So how do you actually go about selecting these traders, and what were the main things that you look out for?
Yeah, I was looking for exceptional stories. I wasn't looking for someone who beat the S&P by 5% a year or something like that. And I had the advantage of knowing some of the traders in the first book, some of the legendary traders. So I knew I was friends with Michael Marcus, who was actually the first chapter in that book. If Michael I actually knew Michael because he left a research analyst job, which was my first job out of graduate school. I was coming in, he was leaving. He was leaving to become a trader, and we met, and that's how we became friends, because he was in New York for still a couple more years, and we used to get together for lunch occasionally. Anyway, Michael went on to Commodities Corp, which was a famous prop trading firm, legendary prop trading firm, in the really dominant in the 80s, I would say, into the 90s. And Michael was, I'm fair to say, Michael was their single best trader. And Michael went on, he also hired Bruce Kovner of Caxton. Bruce Kovner is one of the world's best traders. Interesting enough, Michael hired him. So I also worked at Commodities Corp, not as a trader, but as a researcher for about a year. So I knew Kovner as well. And Michael introduced me. He was very reluctant. Michael's a very shy person. So he didn't want to do the interview, even though we were friends. And he's never given, I don't think he's ever given another interview, and even as Kovner for that matter, as far as I know. And I had a mutual friend from Montescope that kind of finally talked him into it. And so I went out to his home, and at the time he was living in Malibu, and we spent the whole day together doing the interview on the beach and in his house and over dinner. And finally, after dinner, he kind of pushes back his chair. And this was like a dinner cooked he had his personal chef. It was a very good dinner. He pushes back his chair and he says, this was kind of fun. It was a cathartic experience. So he actually felt like he got a lot of weight off his chest in a way. And then he told me, he said, you should interview. And he told me about the best trader he knew. And this is from a guy who had made 80 million in 12 years, beginning with like 30,000. And so when he's telling me about best trader he knew, that was obviously something that got my interest. And he put me in touch on the phone with Ed Seykota. And Ed Seykota, so Ed was a big, really odd, eclectic guy. Anyway, so I spoke to Ed on the phone, and he was willing to do it. I was supposed to go back to New York. So instead of going to New York, I changed my flight to fly out to Tahoe, which is where Ed was at the time. And I figured that I could do the interview in a few hours and catch a late night, midnight flight, whatever, back to New York. But I ended up like speaking them through the night almost, and sort of that went by the wayside. And Ed kind of knew it. He sort of kind of gave me a little smirky, snide response when I said, well, when I told him that I was planning I thought I could do it. And, I said, I'm pretty efficient. I can do it in a few hours and still catch a flight. And he was kind of like, yeah, if you say so, but kind of skeptical. And he was right. And so anyway, so that's how, so right there, you got 3 of the main chapters in the book. And I think that Marty Schwartz, I forget how if I knew Marty or I knew of him for sure. I knew Jim Rogers, not personally. Jim Rogers, I knew taught a course in Columbia, business school. So I sent him, I had written like an analytical text a few years before, which was like a 750-page book called Complete Guide to the Futures Market. And I sent to them as like saying, look, here's my work. I'm not a journalist. I want to do this interview. And sort of, I was just giving him that as proof of what I could do. And so he agreed. And then, when I interviewed traders, and I knew certain people at that time were well known already, like Dennis was well known. And so I interviewed him, and Paul Tudor Jones was still, still early in his career, but I knew of him. He had he had like the first 5 years of his record, and he went on, with Tudor. So, that's what, and then the traders I interviewed, I asked them who they would recommend, and I got some links that way. And before you know it, I had a book worth of interviews.
I see. So in your first book, most of these traders actually started off with a very great reputation already. So do you also in any way attempt to verify the trading records that they have, like you do in your latest book right now, to actually study their trading profile, their trading statistics? So can you share with us a little bit more? What were some of those key statistics that you looked at to decide whether a trader is really a good trader? Not just, I believe it's not just about profits itself, right? So can you share a little bit more about the statistical approach that you have to analyzing all these traders in layman terms as much as possible?
Yeah, thinking back in that first book, I think a lot of the traders, there wouldn't be track records because they were prop traders. People like, Marcus and Kovner when he was trading in, he was still trading CommodityScope, it's the 10-year record at CommodityScope, all that stuff. I was privy to what the records were, but they weren't public. No prop trading firm will release any of its trading records. But I knew, like I said, I worked at the firm. I knew they were real. Because I was at the firm, so they were the real thing. Somebody like Dennis. Dennis, I didn't get it. Well, he was a CTA, so there was a track record, I think, for some of the years. But he was well known to have started on the floor of like less than $1,000, and he was widely known to have made a couple $100 million. So, it was just common knowledge. Paul Paul Tudor Jones, I think he did have a track record because was a CTA. So in some cases I had a track record. Otherwise, I knew they were a real thing. There was a couple of cases where I didn't, in which case Marty Schwartz didn't have an official track record. He just traded solo, but he kept on entering these public contests, and they were public record. And there it was, he continuously kept on entering these 4-month contests. He would take 400,000, turn it into $1 million plus in 4 months, and he did it over and over and over again. So that was kind of out there. So that the different types of proofs. There was one interview where I recall where I didn't. It's a very secretive guy. I couldn't get the record, but I was a research director. I had an analyst working for me who had spent a half year sitting by this fellow's side, and he sort of vouched for me. Yeah, and I still don't believe. I mean, his claims of what he had achieved and what percent of the time he was right, just mind-boggling. But I had this eyewitness who sat him 6 months and said he was a phenomenal, verified that he was a phenomenal trader, just incredibly, just like almost winning on every trade. So it wasn't what I wanted, but and in the chapter I say, look, I'm skeptical too to some extent, but here's what I'm relying on, and I'll let the reader decide. So that was kind of the weakest case I can think of. So, but I always had some sort of, and in the latest book, I basically, unless it was a prop trader where you just can't get you can't get the record, but then I have to verify it by talking to people. I got actual track records. I mean, actual brokerage statements for most of the traders.
I see. All right, so let's talk about the latest book that you have just published, Unknown Market.
I'm sorry. One more thing.
Yes.
I should say in the latest book, a number of the traders came through FundCedar, which I know you're going to talk about. But FundCedar, you can, for many brokers, you can link your account. So I knew these were legitimate because I had these records, going back, 10 years, whatever, for somebody's trade, where the records came not from the trader, but they were through the link with the broker. So I didn't have to ask for their track records because through FundCedar, the data comes directly from the broker.
I see. Okay, sure. We'll actually address about the FundCedar later on. So
Sure.
Can I just understand from you, this Unknown Market Wizards, it has been like 30 years since you published your first book on Market Wizards. And 30 years later, was it like meant for anniversary kind of purpose that you actually wanted to publish this Unknown Market Wizards book? What was the motivation behind this new book to cover unknown traders?
Well, there were a couple of things. First of all, I did the last Market Wizards book was about 2012. And the first two came close together, 89 and 92, I think, were publication dates. And then, it was about 8 years to the next one. And then I think 12 years to the next one. And then this latest one was another 7-8 years. 8 years till that came out. So there is, it is kind of in some sense, a roughly normal gap between when I do these books. There was a catalyst there, is because I had in mind that if I ever do another Market Wizards book, I wanted to include Peter Brandt. And when I originally started on the concept of this Unknown Market Wizards, I had that concept for some years. Actually through FundCedar, because the idea that I would find a number of unknown traders, and I thought that would be a good theme. So all the traders, were basically unknown. And Peter was relatively unknown until a few years ago because he was just a solo trader. Nobody knew Peter. He's not managing money, but he started tweeting, and he sort of built up a very large Twitter following. So in the few years that it transpired, he was known by his Twitter audience. He's still unknown in the world because he doesn't manage money and so forth and so on. But I wanted to get him in. I thought he's a solo trader. He's unknown. He doesn't manage money. He's unknown by most people. I thought good enough. But the reason he was a catalyst was because I have a lot of respect for Peter, and I think he has a lot of market wisdom. And I always regretted not having him in an earlier book. And I don't know if I met Peter. I might have met him after I wrote the the 2012 hedge fund market wizards. But and he wouldn't fit in there because he wasn't a hedge fund. So, but I knew I wanted to include him, I wanted to capture his wisdom for posterity. And he lived in Colorado as I do, and he was going to be moving. So that was the catalyst. I said, well, I might as well start with I might as well get Peter's chapter done before he moves, so I'll save myself a trip. He lived about a 2-hour drive away. And turns out by the time I got around to doing the chapter, he had already moved. So I ended up flying to see him anyway. But that was the catalyst. That's what got me going. So that was the first chapter.
I see. And I'm pretty sure that along the way, you definitely will have plenty of potential candidates to actually feature in this new book. So what were the key criteria that these different independent traders or unknown traders would have to satisfy before you decide to choose them and feature them in this book? Because I see that you have 11 traders being featured, and I believe that you have a larger pool of traders to choose from. What were the main criteria you look at?
Sure, I was sent hundreds of suggestions. One of the things I did, well, I had FundCedar. I also personally knew some of the few traders, and I had sent out a tweet and got literally hundreds, saying I'm doing another book. Anybody know anybody's really superior as a trader who would fit the bill? Let me know. And I got like literally hundreds of recommendations or people writing in directly. So what I was looking for was, I had certain criteria, like I do. So one thing is had to be a longer track record. Now, there's just a trader in there that maybe track record was 8 or 9 years. But for the most part, I was looking for 10 years or longer. Some of the traders have 20 years, more, one even has 30, So I was looking for the long-term record. So it's not just somebody who's hits it for a few years and that's that. So that was a key criteria. And then I was looking for one or two things. Either somebody who had built and started with a moderate sum of money and built it into a fortune. Best example of that is probably Jeff Newman, who started. Well, he had $7,000 in the stock account that he started with, but I think about 4,000 of that, more than half of that, was a stock his father had left him, and that just stayed in the account. He didn't use that, so he really started for about $2,500, $3,000. And when I did the interview, he was up to 50 million. And I've been in touch with him, and I think some months ago I spoke to him and he had basically quintupled that, So, hundreds of million from that original couple of thousand. But even when I did the book, 50 million, that's good enough, So, 2,500 to 50 million is a story, right? And then I was looking then I always like to see people who have really strong return to risk. So, and our traders in here who have like ridiculously high Sortino ratios. And I say Sortino rather than Sharpe because the Sharpe penalizes for downside volatility. The Sortino doesn't. And a lot of these traders I have in the book are extraordinarily asymmetric. So they have these incredibly really big tails on the right side, but not on the left side. The Sharpe ratio misses it. So in the Sharpe ratio, they just look like extremely good traders. On the Sortino ratio, they look like they have Sortino ratios I've never seen in my life, even in the first Market Wizards book. The best return risk numbers I've ever seen. So a number of traders in that book fall into that category. So that's what I was looking for.
I see. So in a way, when you mention about the reward versus the risk, what you're trying to say is that many of these traders were actually able to generate outsized returns while keeping their risk at a very minimal level, right, relative to their profits that they make. Right. Okay. So that explains the positive volatility in their equity and trading account, but actually didn't experience like significant drawdowns, even though the rewards were actually very outsized in the magnitude of it.
Right. So they had high volatility, but it was all on the upside, and the Sharpe ratio would penalize that, right? So, some of these traders had they had months where they had returns of 50 or 100% in a single month. So
I see.
They had a number of months. One trader, I think I counted like 30 months where he had returns of more than 25 to 30% in a single month.
Wow, that's That's really quite unimaginable for a lot of people. And I remember that in your latest book in Unknown Market Wizards, you actually mentioned right at the very start of the introduction that many of these traders that you actually profile in this latest book were actually able to outperform even the best professional asset managers you have profiled in your other Market Wizards book. So can you share a little bit, based on your understanding, after interviewing all these different kind of traders, what do you think is the main reason that these independent unknown market wizards were actually able to outperform even the best professional asset managers?
Well, it depends on their methodology. And somebody like Jeff Newman just is insanely good at pinpointing entries and exits and getting very early in trends. I mean, he showed me after our interview, and I was there the whole day, but after our interview, we went to his office, he had the screens, and he would show me some of the trades we talked about. And it was like uncanny. He would show me, I mean, these were actual trades that he did. And remember, he sent me his brokerage statements, okay? So he
literally sent you all the brokerage statements, and you got to really like dive deep into it.
No, I didn't go down to the trade by trade level. But I mean, I was just looking at the the summaries for each month just to verify the numbers, the balances and the prop P&L. That's what I was looking at. But like chart after chart, he would show me where he got in. He got in right near, really close to the bottom of these moves that went like just berserk, like stocks that went from $2 to $100, just stuff like that. And then a lot of these stocks I noticed went all the way back down. For example, like 3D printers. I mean, this was one of the areas we talked about. So 3D printers, I mean, he's like very early on. He sort of catches on to these emerging trends before the trends really. And so he buys every 3D printer that's being produced. He talks to the CEO, he really digs into it. And he also uses technical to time it. So he's very good at spotting when the trend is beginning. And then, he rides it, and when it's getting too well known and it's in 3D printer CEOs appearing on CNBC, that's where he gets out. So and you have trade after trade where he gets in like single digits, gets out like near triple digits, and the stock goes all the way back down again. So just the uncanny skill. Just like I think it's just innate to some extent, right? I don't think you can learn that.
I finished reading your book, and this Jeffrey Newman was also someone that actually stands out among the 11 traders, because one thing that I believe is that, or one thing that I see is that Jeffrey is probably someone very relatable to many of our summit participants, because he actually started off being just an independent, alone kind of trader. And the interesting story behind was that he was the one who actually emailed you to ask to be featured in this book, right? So definitely this kind of unsolicited approach seems a little bit dodgy most of the time. And you actually go on to feature him and actually analyze his results. So
I was especially, he sent me this email that he had made, turned a few thousand to 50 million. And my first thought is sure, but I you never know. So, I mean, I wrote him back. I said, look, at the time, I wasn't planning to do another book. I said, look, I'm not planning to do another book, but I'll keep your email. And if you can verify the results when I do one, it certainly sounds like a story I'd want to include. And so it turned out that I did the book sooner than I thought. And I got back to him and I said, well, I'm going to be doing another book. If you're interested, you want to provide me with, and he sent me, all the brokerage statements from all the years, So he sent me all his results. And it was for real.
And were you shocked when you looked through his brokerage statements and to realize that, wow, what he said really is true, and you didn't even realize that?
I mean, you don't come across records like that, every day. I mean, it's truly extraordinary. His record is truly extraordinary. And ironically, a year or two later, it would have been that much more extraordinary, but it was still extraordinary when I did it.
I see. So I definitely would want the summit participants to go and read up your book and about this trader on his own. But generally, I think in this session, I just want to bring out some highlights of this trader, Jeffrey Newman, which I think could be helpful for the summit participants to actually have some ideas about how to improve their own trading. So let me just quickly cover Jeffrey Newman's record based on what you wrote in your book. So he had about average annual compounded return of between 53% to 80%, depending on which year you started, to measure his track record. And he's generally a long only 1 to 5 year trend line breakout kind of stock trader who focuses on penny to small cap stocks. So that is his profile. And so he focuses on things like catalysts, sectors, technical analysis, and what was one of the other management decisions and filings. Okay, so Jack, let's just focus on Jeffrey Newman. What do you think is the main characteristic or the main traits of Jeffrey that makes him a standout trader? Although his profile really fits like the regular independent retail traders out there, focusing on penny stocks, long only, using basic price action, trend breakout. What do you think makes him so different compared to the many other retail traders who were not able to make money or become profitable, applying the same kind of methodology and strategy?
Well, it's interesting. I mean, he does certain things like it's multiple things, right? It's this ability to find trends very early, his ability to read people in terms of when things are getting too popular, that's where he's getting out. So he's very good in that, in kind of picking up on what are going to be public trends and when there's too much enthusiasm for something. So he's got like an antenna, that just really picks up on these things really very well. And he does a lot, he does a lot of research. He also does a thing where it's talked about in the chapter that he creates his own sectors. Like we talked about 3D printing. So he'll create a 3D printing sector, or marijuana stocks. He'll create a sector, that'll be his sector. So whatever concept he has, he'll get all the stocks that are part of that, and they'll be in the sector. And he has his, screen. He has his software set up so he can go and just look at all the stocks in that sector. And what they usually do, find the leader, have a biggest position there, and then have positions in all the others as well. And so that's another thing he does. Now, a lot of what he does is I would say fundamental psychological, but then he also uses technical for entry and exit. And he described what he does. And this is a good example how he's doing something that a lot of people use and lose money with. And for him, it's very effective. So let's take that as an example to really hone in on your question. And that is trend breakouts. Okay. Now, I had a fair amount of experience with technical analysis, and I kind of feel that trend breakouts are just they're really prone to a lot of false break. You get a lot of false signals that way, and people are fooled. And I have this in my book, A Complete Guide to the Futures Market. I make this point, and I have some examples. People are fooled because they look at charts historically. And if you look at charts historically, you can draw all these beautiful trend lines. What people don't see is that if you go from the beginning of the trend and follow through, put a piece of paper over the rest of it, you would draw different trends. You'd have the trend, it got broken. Now you redraw the trend. It got broken. Now you redraw it. And that happens 3, 4, 5 times. And finally, that the last point holds, and it goes on and on. So it looks like a perfect trend, but you would have known ahead of time that was the trend line. You would have had 4 trend lines that failed before you got to the 5th one that finally held. So it really fools people. And I think, if that's all you do is buy upside breakouts from trend lines and downside, sells downside breakouts, I think it's a net losing strategy. But yet for Jeffrey, it's really effective. Why? Because first of all, he knows he's not just randomly buying any breakout. He's picked out, this is a trend that's ready to go. This is an idea. This is a concept. He's early on. He's looking, the stock has been going down kind of steadily, and it's just losing momentum on the downside. And he knows he believes this concept is going to take off. So he's willing to go with the breakout. So when he gets a breakout, he'll go with it. And if he's wrong, he's out. He'll be out in a minute, So he may take a few stabs before he gets it right. And then as the trend progresses, he will still trade, the market will consolidate. He'll trade breakouts from the consolidation and add to his position and so forth. So he's using a technique that by itself has no value by itself, but the way he employs it, which is combining it with his fundamental concept and picking upcoming trends and combining it with money management, those two key ingredients, that turns the trend into a really effective tool. And it's funny when he said, I don't use regular trend lines, and I said, well, how's yours different? And he described it, and it's really the same, and it's kind of in that chapter, I kind of, I said, well, what is he doing? And when he described it, I said, well, that's a regular trend line, but it's not the trend line. It's not the trend line he's using. It's when he's using it, what he's using it on, and what he does if it doesn't immediately work.
I see. And you mentioned earlier on just now that when you were actually studying his brokerage statements and his record, and you look at the charts of those positions that he made a lot of money in, you saw that he went in almost at the bottom, and he managed to get out almost at the top, that kind of scenario, right? So were there a lot of situations, as you mentioned, he is also the kind of trader that once he enters a position, it doesn't work, he will get out very quickly. Do you also actually see many small trades that he got in and got out almost pretty soon thereafter because it didn't work out?
Yeah, so a trade doesn't work out, he's out very quickly, and that's the end of it. But if it is working, he kind of stays with it. So he'll have his base position, he may build it, and as it gets up, as it goes on more and more, at some point he begins scaling out of it, right? And that last bit, he gets out at the top, that's where he kind of is abandoning the position totally, He'll never go short, even though he's been good at picking tops, he never wants to be short. So it's just that's where he's getting out of the last position. So he is using scaling to get out of these positions as well. But he tends to hold it he's looking for, moves that will be sustained for, 6 or 12 months. He's looking for not just a quick, 5-day move or something like that.
Okay. So in a way, when you look at his statements, those positions or those stocks that he made a lot of money from, he typically holds it throughout a period of between 6 to 12 months kind of time.
Yeah, I don't know what his average is on the stocks that he holds for a long time, but really it almost is dependent upon how long the trend persists,
I see. And he also mentioned 3 other key pillars, things like catalysts, things like sector analysis, and things like the management foulings, the kind of decisions that the management does. Can you elaborate a little bit more about those areas?
Yeah, so a number of things he does. Yeah, so he's paid, there are some of his biggest winners he got in for no other reason that he just saw that there was a big volume and it was by management. And these are sometimes penny stocks. And there's a story, one stock, which was actually ended up being kind of a scam, but he didn't know that. That's the odd thing. And this was a penny stock type of play, penny stock that went to like $29, and on pure hype. But that's the odd thing. Most people will lose on those type of things. They're the suckers. But and he's not in on the pump or anything. He just sees this insider buying, and so he used that to get in. And then he sees people starting to pay to like this advertising on TV from this company and so forth. And so. So that's sometimes that could be a clue what insiders are doing. We talked about the sectors, catalyst. So I'm trying to think. It was Jeffrey Newman's, I believe. Yeah. So he talks about. Here's a good example was of the ethanol stocks, and there was before ethanol became a thing. There was an article in some Kansas City paper, I think, some small paper, not the Times, not the Wall Street Journal, not in a bunch of papers, but some Midwestern small paper talking about this bill. And, the thing was going to make it so ethanol had to get included. So he caught, well, he actually was part of, he got that through a chat room, a guy he was paying attention to and researched it himself. But so he got that position. And so the catalyst was this upcoming bill. And when the bill passed, he got out of his position, and that was the top of those stocks. But so there was the catalyst. The catalyst was the bill, So catalysts can be important too. And I'm sure there are other examples in that chapter of catalysts, but you're right. That is one of the things he uses.
I see. All right. So in total, you actually cover 11 traders in this Unknown Market Wizards book. So there's also one very interesting guy. His name is called Pavel Krejci, if I pronounce it correctly. Yeah. So you mentioned in a book that you actually discovered him through the FundCedar platform. So can you share a little bit more about FundCedar? I believe that you are a co-founder and the chief research officer at FundCedar, right? So can you share a little bit more with us about what FundCedar is about and how did you actually manage to discover Pavel through FundCedar?
Yeah, so first of all, I'm not the CEO. The CEO is Emmanuel Bellari, who is my partner. He and I founded the company, but it was his original concept. He told me about it and I said, yeah, it sounds like a good idea. And I agreed to join him on it. The concept of FundCedar is to create a global central point where traders around the world could, go on, have a trading platform, get their performance analyzed. But for us, the thing was that we could then discover all these traders like Pavel out there who you would not in a million years find. I mean, here's a guy in the Czech Republic, ex-bellhop, trading his own account, So you would never find a guy like that. So the idea was to find these undiscovered traders who have found some way to win in the markets with consistency. And so that was a purpose of FundCedar for us, was to discover this talent. And then there's the FundCedar's two companies. One is a technology company, which provides the platform for traders, the performance analysis and the graphs and all that, which are free because we're not trying to make money from the traders. We're just trying to find them. And then the other company, FundCedar Investments, would then use that database to be able to create products. So we concentrated on the platform, the trader platform, for the early years and so forth. This year, we're now transitioning, and we're now actually, what are we, mid-May? We're probably like by July, I expect by July, probably July 1, we will launch our first multi-trader fund. In conjunction with, we have a London financial institution that is partnered with us. It hasn't been publicly announced yet, so I'm not going to use the name because there's been no press releases and all that, but the agreements have been signed. So we have them as a partner. We also have an institution, a New York institutional firm, First New York Securities, which manages a couple of $1 billion, as does the other firm, and they're also partnered with us. And they'll, so we have these major institutional partners, and we also have some other institutional contacts. So the plan now is to launch that first fund, and using the traders that we've found, and then just build from that. And there's other products that can come out, other managed products that can come out. We have a FundCedar index, which can be turned into a product, which are traders that have been on a platform, which is a no hindsight type of index I put together years ago, which has been generating good return to risk and so forth. So, and we will also do some of these traders that turn out to be stars with capacity. We could well just launch them as single entity investments as well. So that's the whole idea. That's the idea of FundCedar. If people are looking for an opportunity, and I should stress here, you really have to have superior results. I mean, we're not just looking for run-of-the-mill results. But if people are really superior traders and want to have an opportunity to manage money, and even if they don't have, Pavel has nothing more than a high school degree, right? Even if they don't have any, they don't have the education that people look for, they didn't go to Princeton and all that. They don't have the connections. They don't have the pedigree, whatever. We're not concerned about any of that. We're just all we care about is can they trade, and so people want the opportunity to manage money. Oh, and not to even if you're not a great trader, but just if you want a platform which will give you free analysis, underwater charts, equity curves, ability to run technical analysis on your equity curve, all sorts of stuff. So you get all that for free. So all performance stats and everything else. So that's still available. So for either for a lot of people, that's all they'll want. That's all the only motivation. And for the superior traders, there's that, but there's also the opportunity to be able to manage assets without the need of establishing your own business. They don't even have to be regulated because FundCedar is regulated, our institutional partners are regulated. So, they would just be hired as sort of, you can think of it almost as prop traders for the fund, so they don't even have to be regulated. All they got to do is just trade. So that's the idea of FundCedar, is to create that central spot where traders can go and have an opportunity to manage assets, and where we can find undiscovered traders. And it doesn't make a difference what country you're in. I think Emmanuel's told me that we've had registrants from over 100 countries. So you could be anywhere in the world.
Wow, that's really a very fantastic idea. I mean, in this current era where many of the funds out there is really more about pedigree and marketing capabilities, you guys actually try a different approach where you focus on real verifiable long-term performance to actually bring the right so-called fund managers or traders to manage a fund. So I suppose you as you mentioned, you are going to be starting off with using institutional funds for a start. Is there any plans to allow individual retails to be able to park money inside the funds as well? If let's say they decided that, I'm not going to be a trader. I know I'm not a good trader, but I want good traders to actually manage my capital for me. Do you have any plans for individuals or to be able to invest in this fund as well?
Yeah, initially the investors in the fund are going to be big ticket investors, basically our partner, either our partners over. So it'll be like people coming in for 5-10 million, at the beginning, a piece, and that's what we'll just take in the beginning. But once the fund is going, it'll be open like a hedge fund is open to investors, qualified investors. So so we look to aim for more institutional or family office, high net worth, rather than the democratization of this investment is on the allocation side, not on the investment side. So on the investment side, I'm sure we'll continue to be looking for, like I say, larger investors. We don't want to go down to small investors. But on the allocations, but on the allocation side, that's where we're willing to look for small fish and stuff like that.
I see. Now, from the angle of those traders who wants to participate in the funds as one of the top traders that will help to manage the fund, how does it look like from their side? Do they just trade regularly as normal and the fund will just allocate a certain amount to them and then just track their returns and stuff like that and reward them and remunerate them accordingly? Can you share a little bit more about the angle?
Sure. So the structure is going to be kind of straightforward. It won't be conventional. It won't be like a fund of funds. It'll be a fund of managed accounts. So the fund will exist as a major holder, and it will then create managed accounts for the individual traders. Virtually all of these traders, I think in the beginning, all of the traders trading their own account. And while I'm not the one in the firm who's involved in the operations, I believe the way it should work, and I believe the way it will work, is that the trader will continue to trade their own account, and they'll trade our account, and there'll be at the beginning of every month, there'll be an understanding, okay, you've got 2 million and the fund got 4 million, as a simple example, right? So that means that, 2/3 of all the trades go to the fund, 1/3 go to you. So they put the order in one and it gets split. So that, I think, is the way it will work. I think that's probably the most sensible way. So it will definitely be managed accounts, And, so I've had people who would like say, well, we only manage a fund. I said, I'm sorry, we're not going to invest in a fund. We have to have full transparency and full control.
I see. And I suppose those traders who's participating in the fund, they will be remunerated based on performance basis,
incentive,
right?
Yeah. So our model is only incentive, no management for the traders. And there's a good reason for that. First of all, I think that's fair. But second of all, remember, we're not asking them to set up any business. We're not asking them to get regulated. We're not asking them to do anything. So they just have to trade. So there's no cost for them. So there's no reason to give them a management fee.
I see. All right. So now this FundCedar is really a very interesting concept. I think there's some similar concepts out there as well, things like copy trading and stuff like that. So in a way, it's just a different format and different structure and a different kind of customers or people who's putting the money into the funds itself to be managed by all these top traders. Now, let's head back to the big picture again, based on this Unknown Market Wizards book that you have done. So you actually, at the end of the book itself, you actually mentioned that there's about these 46 market wizards lessons that you managed to derive from interviewing these 11 traders. Now, as a conclusion to today's interview, can you pick maybe like 3 to 5 of these market wizards lessons that you have stated in these 46 lessons itself? Which are the 3 to 5 of them which you think will be particularly relevant to our audiences today who are mainly...
I didn't put them in any particular order, and I don't know if I could even group them. I was basically taking, all of these are valid lessons. And the thing about them is they're, some things may be very important to some traders and unimportant to other traders. So there is a personal element to it as well. I mean, if there are any particular ones that you want me to talk about, I can. But, there's no like, top that I would say that, well, these are the 3 and that's the main thing. So, just a couple of points. I'll pick out a few random ones here. One important lesson that not only occurs in this book, but I think I've picked this up in every Market Wizard book I wrote. I made this point, and that is, don't look for. There's no secret out there. I mean, there's no single secret. There's no one right way to trade. What you really got to do is you got to find a way to trade that works for you, and there could be trades that work well for traders in my book, but if you try it, it's not going to work because it's not compatible. So if you don't believe in technical analysis, don't like technical analysis, it's not going to help you to follow somebody who's using technical analysis, the tips, so you've got to find your own approach. So and it's a matter of discovery. You don't know. I went through lots of iterations myself. You don't necessarily know. In fact, you could end up in an entirely different place than you started. I started out as a pure fundamentalist, lost money. I ended up, I would say pretty close to 100%, technical. I'll still use like the long-term fundamental concepts, but nothing, only occasionally, and it's not really fundamental analysis. So you can't go by what you start out with. You really have to discover. So that's one basic thing. So let's talk another, again, not an order of importance, but just another idea is, this comes up so often in so many of the great traders, is learn from your mistakes. Your mistakes are worth money. So the way to get better as a trader is to be rigorous, is to, like a lot, as you probably recall, quite a number of traders in this book actually keep a log of every trade, why they did it, how it turned out, what their motivation was, even what their psychology was and all that. But one of the things they also note is when they were wrong and why they were wrong or what they did wrong. And they reviewed those notes. And, Ray Dalio, I interviewed in Hedge Fund Market Wizards, he kind of built the world's biggest hedge fund on a key concept of learning from mistakes. That's almost his religion, is to learn from mistakes. And there's one trader in his book who's a disciple of Ray Dalio, and there's a story in the book about how he bid on a contest to have lunch with Ray Dalio. I won't go into all the detail of it, and whether he got it or not, I'll leave that for suspense. But anyway, but he got that major input from Dalio as well, and it's very important in his own trading. So that's another important point. One thing that kind of permeates every Market Wiz's book, and maybe people don't like to hear about it, but it is truly just essential. I mean, you cannot succeed as a trader if you don't have good money management. So you could have a mediocre trading approach and good money management and be net profitable. Okay, you could have a brilliant trading approach, but poor money management and go broke, just a matter of time. So, people, it's a lot sexier coming up with a trading idea, a trading concept, a trading method, a trading system that's your own. Wow, look how brilliant I am. I thought of this, and here are the rules, and boy, that's fun and all that. Money management isn't fun, but it's essential. So, you can't stay in the game if you lose your chips, and if you don't have money management down rigorously, that's what's eventually going to happen. And there's lots of stuff about what to do in money management, what concepts are, but that's another sort of one of the key, one of the lessons I use that I probably spend a lot of time on. We talked about it earlier. The power of asymmetric strategies. I think if somebody reads this book with that idea in mind, they would be struck by how many of these traders have a method that seeks to pinpoint the entry, risks a little bit of money, but if they're right, they can make a lot of money. That underlies so many, and it underlies trading methods that are completely different. You think somebody like Peter Brandt does that. He does it with chart analysis. You could take someone like Amrit Sal, or Daljit Dhaliwal or Richard Barge, who do the same thing, but they do it with events, they're being very, very prepared for, let's say, central bank announcements or things like that, and knowing exactly how to respond and knowing what they're looking for and putting on that trade. And if they're right, they'll get a big move. And if they're wrong, they're out in less than a minute. So completely different approaches. One's technical, one's fundamental. They're just totally different, but they have that underlying principle that they're trying to pinpoint a spot in the markets where if they're right, they can make a lot of money, and if they're wrong, they don't have to risk much. So that's another key concept.
I see. Fantastic.
Yeah.
Fantastic. And I'm very, very sure the rest of the lessons inside your book is going to be really, really so helpful to anyone who's going to pick up the book and have a read at it. So thanks again, Jack. It has been a very insightful interview for me, and I'm sure that's the case for the summit participants as well. So thank you so much again for your participation in the summit.
Yeah, thank you for your questions. Okay. Take care.
Fantastic. Right. So now for those of you watching this summit video right now, if you would like to keep in touch with Jack and check out his latest book, Unknown Market Wizards, The Best Traders You Have Never Heard Of, remember to click on the web link provided below this summit to learn more, below this summit video to learn more. And at the same time, if you want to explore FundCedar in terms of using it as a platform to actually measure and track your trading performance, as well as potentially using it to be discovered to manage money for institution, you can also check out the link below to reach out to FundCedar. And finally, if you would like to review Jack's summit video beyond the summit or to watch more of Jack's recordings from our previous summit, you can also check out our TraderWave TV service, which is in short, the Netflix for trading education. Now with that, we have come to the end of this interview. I'm your summit host, Philip Teo, and I hope you will continue to learn and apply the teachings from the many wonderful speakers on board this virtual summit. Take care, and we talk soon.